Hi guys, welcome to honeystocks.com. Bit of an impromptu analysis this one. As you can see there, I am focusing on a lot of the tech stocks in today's analysis. Now, the reason for that is my email and all my various social medias have been blowing up, just asking me what my thoughts are about what's happening on a technical level with many of the stocks that I'm about to walk you through. So hopefully you get a bit of insight from this. If you're out there and you're struggling at the moment and you're holding a lot of these positions that are underwater, I have absolute complete sympathy for you. I'm not here to say to you, you should have done this, you should have done that. What I'm here to do is just show you the logical areas in the market you can maybe expect to find a little bit of support, and hopefully we see a recovery, but hopefully you appreciate the complete honesty in the analysis. I'm not here to sugarcoat anything or pump up your dreams or anything like that, so hopefully you get some insight here. Now, please pause the video, make sure you're comfortable with that before going any further. I am registered with the CMT Association. Technical analysis is something that I am super well known for. My work is featured in multiple investing newsletters, etc. So hopefully you get something from this. A lot of you are going to be feeling like you're getting knocked out at the moment, and like I said, I totally understand. But if you do enjoy this, please do subscribe to our channel. In the bottom right hand corner here, there should be a little subscribe button. And at the end of today's video, I've got a bit of an announcement to make. It's something that has been, I suppose, maybe 18 months in the making. It's something that I get asked about on a daily basis, but I'll go through that a bit later on. But let's just dive into these charts, guys. And where I really want to start is with the rotation graph. Now, what we have to understand with the market is that the market is revolving all the time. A rotating market is the lifeblood of any bull market. Those are words that I've heard time and time again, and they completely resonate with me. Now, what I hope you can see here is that we have some of the software and tech ETFs moving from the leading sector into a lagging sector, whilst at the same time we have financials and banking moving into the leading areas. Now, this is something that I highlighted last week to obviously my client group and community, and that is what is holding true at the moment. Now, there's obviously many reasons for it. I think one of the things that we have to all accept is there's been a tremendous amount of money made within cloud-based tech and software tech over the last 18 months. Many of my clients have made hundreds of thousands of dollars, and that's been a place that you wanted to be allocating your risk. However, like all good trends, they always come to an end. It's no good in this day and age to just hold blindly and say to yourself, I'm buying this, what you perceive to be a great company, because it could be a great company, but at the same time as well, it's really about what Wall Street's opinion of the company is. Do they want to be buying it or do they not want to be buying it? That's what ultimately dictates the direction of price. And as soon as the market and the big money make their quota, so to speak, they're quite happy to rotate into other areas, and I think that's what we're seeing at the moment. I think we're seeing a rotation out of a lot of the cloud tech names, and we're seeing that rotate into financials and banking. Now, the one thing that you need to understand is the bottom of the page should not be mistaken as support. What we can see here with this particular ETF is it has broken support, and it's done that today. Okay, so that's not great news. What you should ideally hope to see is when we see a breakdown or even a breakout, if that move is going to fail, you want to see it happen within a couple of days, because what we get with failed moves is fast moves in the opposite direction. So I would be watching this level very, very closely to see if we get further declines or whether we get a very quick rebound. If we get a quick rebound, that could well be good news in the short term for a lot of the stocks that you're going to be holding. We also have this ETF here, IGV. Again, we have to monitor this. We're at key support levels at the moment, and I think if that level breaks, then that's going to be another catalyst, I think, for selling, distress selling, etc. So that's something that you want to keep an eye on. Now, as for the individual stocks, I have around 20 here that I have been asked about most often over the last week or so. Now, Adobe is obviously a huge company, great company. I use Adobe myself. However, again, it's about understanding what the technicals tell us. And I think at the moment, if we drop below this 259 level, as we can see, it's been historic support, then I think that might well be the catalyst for a bit more selling in Adobe. Amazon, obviously, leading company. It's done nothing for the last 2 years, but what we have here is we're currently just hovering around support. But what is concerning to me with Amazon, and this probably won't fit, but what I suppose I'm trying to get at here is we have a series of lower highs, and obviously we can see a declining trend starting to materialize here. So that would be a concern with Amazon. Now, AYX, for those of you that picked up on my chart at the weekend here, I obviously highlighted this descending triangle, highlighted a key level of support. We got distress selling, and that distress has continued. Now, I actually expected this bottom range target to be met within a couple of weeks, but as we can see, it's actually just been 2 days, which is remarkable, really. So I'm watching this level with a lot of interest. I would expect a bit of a short-term counter trend bounce, but I think what we have to accept here, guys, is that the landscape has changed with AYX. We're no longer in a bullish environment. Again, for those of you that follow my work closely, you'll understand that this is the level that I highlighted a couple of months ago and just said, look, this is an area that you need to be paying attention to. Lo and behold, we got a huge move to the downside. We formed a bearish pattern and down we go. This is technical analysis 101. I know that a lot of you will be watching this with a fundamental view, but I would highly, highly encourage you to try and learn the technical approach, whether you choose to learn that with myself and obviously my program, etc. That's entirely up to you, but wherever you choose to learn technical analysis, you should learn technical analysis. CLDR, now this is actually one that's held up okay at the moment. I think if you set an alert for $10, I think that might be a level where you might want to consider some buying action. Again, this is the failed breakout and what I was talking about, and failed moves in the opposite direction. This is, again, absolutely held true with Coupa Software. Breakouts to all-time highs aren't really working at the moment, with the exception, I would suggest, of Apple, which has done pretty well recently. But again, we need to just be mindful here, and I think this is the level to now pay attention to. I think this 114 level is going to be key for Coupa Software. So how it reacts here, does it get a bounce to the upside, or do we get more distress selling? That's the big question at the moment with Coupa Software. But I think that 200-day simple moving average is an area that you want to keep a close eye on. Now, CYBR, again, very, very similar, I would suggest, to AYX. We've obviously had a huge decline, distress selling, and I think that distress is going to continue if we drop below this support level here with CYBR. So that's absolutely a stock. If you're out there and you're in it at the moment, I do hope it rebounds for you. I don't have any positions in any of these cloud software stocks. So absolutely, this is an area that you absolutely want to be paying attention to. Now, this is a stock that was actually highlighted by one of my clients, no less, at the weekend, and it does seem to be holding true. However, again, if you're out there and you are in EQIX, this is an area that you want to be observing very, very closely. There are far better options out there in the market. I've highlighted many of them last weekend. So, you know, absolutely EQIX, if you're out there, that's the level to be aware of. This is one that is showing a bit of strength at the moment. We've just recently today broken out above a 200-day simple moving average. We've broken out above the previous resistance, which has been dating back to February. So that's not a bearish move for this particular stock. So hopefully the expectation is that that should move off a little bit. Now, INTU again has broken below this 200 simple moving average. Now, that is an issue in of itself. So you do need to be mindful here. And sorry, I'm just building this in here. I think that would be a level that you would want to watch as a potential support level. Now, there are many other tools that you would use in order to determine support levels. This is just one of them. This is just basic principles, technical analysis 101 of support resistance. But I think that's a logical level to keep an eye on, is the 240 level. I think I would personally say all bets are off below that level, but if you're out there, it would make sense to start to formulate a bit of a game plan. MongoDB, I think you need to be absolutely mindful of this level below 110. As we can see, it looks like we are filling a previous gap at the moment. So how it responds here is going to be key. But the one thing I think we can all accept is that the stock is in a bit of distress. It's no longer trading at $185 like it was just a few months ago. We're now down at 115. A lot of you are going to be saying to yourself, buy the dip, etc. But there is a very real danger of catching a falling knife, and you do have to understand where we might be seeing bottoming patterns and so forth. And I don't think we're seeing one at the moment with MDB. Happy to be proven incorrect on that, but that's my technical take on things at the moment. Microsoft is still chopping about, doing nothing at the moment. I think a lot of us have been waiting patiently for a potential breakout here. It's logical that we start to come back here and we test this lower level of support. So I think if you're out there and you're in Microsoft, I think it's holding up fine. It's obviously a great company. Obviously, it's a big week with earnings season, not obviously with Microsoft. I don't think they're reporting this week, but there's a lot of the big tech companies are reporting this week. So how they perform will probably dictate in the short term just which direction we end up moving there. Okta I highlighted at the weekend, and this was basically the chart for Okta. Now, the concern was that we obviously had a rejection here. We're clearly in a bit of a sideways range at the moment. Now, with any range, you do hope that it moves to the upper end of the range and then ultimately breaks out. And there is a case to be said for that. I think the pleasing thing if you're out there in Okta at the moment is that this level has held firm on a day like today. Yes, it's not had a great day. I fully accept that. But we've not broken key support. So I think you can still technically be bullish above this level, but you do, in my opinion, I do think you need to watch this level with a lot of interest. Shopify, again, is in a range at the moment, very similar to Okta. I think this is the concern, though, that the fact that we couldn't regain above, we got an immediate rejection at the 50-day simple moving average. That's a concern for me with Okta. Now, what we can see is the 50-day simple moving average is starting to slope downwards. And again, that's not something that we see in a bullish environment. So if you're out there in Shopify, there is an opportunity. It may well rebound from here. We might get another support level and bounce. But again, it makes a lot of sense to understand where the blind spots are on your chart. and to understand where the danger zones are. That's just something that's logical common sense, and that's really how I see it with Shopify at the moment. SPLK again is holding up okay, rejection at the 200 simple moving average, and we are hovering again at key support levels here. So that would be the level that I would definitely want to be keeping an eye on with SPLK. I think a break below that, I think we've seen with other charts that I've just gone through how that tends to look. Trade Desk, again, this is one that I've had a bit of back and forth with a lot of you guys on Stock Twits over the last couple of weeks on this, because I highlighted a rounded bottoming pattern, and that thesis looked like it was playing out perfectly. And then we got an immediate rejection here, and as we can see, that rejection is trendline resistance, and that's now the concern. We've now got support for a downtrend. So unless we break, and this is something, and unless you were to get something that kind of looked like this, you know, that's kind of how I would see it. I mean, I wouldn't necessarily be massively bullish even if we were to break that trend line, but I think that would be perhaps a short-term catalyst for a bit of momentum to come in. We're in a bearish range with momentum, so again, that's something to be considerate of. But as we can see here, I've highlighted the carnage level. I think if it does get back down to this 173 level and breaks, then you can probably tuck Trade Desk to bed for quite some time. So please, if you're out there in Trade Desk, just manage the position. If you're currently in profit on it, just, you know, I wouldn't be someone out there that's taking any big chances. I hope that it rebounds as much as everybody else, but I think there's a lot of concern with Trade Desk at the moment. Team, I think the level here to watch is around 106. We've obviously started a bearish downtrend, downward sloping 50-day simple moving average. It's not something that we see in uptrends. So I think with Team, I think that's a problem. Twilio is about to potentially enter a lot of distress. I think if it breaks below $100, that's going to be a big problem for those of you out there in Twilio. I'm sorry to say again that's just as clean of a downtrend as you're likely to see, and that's just what we're seeing at the moment, unfortunately, guys. Viva Systems, I think if you break below this 139 level, we're getting very loose support here again at the 200 simple moving average. But like we're seeing with a lot of these stocks, the more that this level is tested, the more likely it is to eventually break. So that's a problem. Zendesk, again, highlighted last week. I think there's a potential for this to go to 50. Again, hopefully it rebounds. Hopefully that is proven to be incorrect. But we've got a downward sloping 20-day simple moving average that does look like it's about to get quite aggressive. Zscaler, I don't know if I can say much more. It's down 53% from its highs. A couple of months ago I highlighted this level, and lo and behold, it's in a complete distress mode at the moment, unfortunately. And the bottom of the chart there is at $30, and there's a lot of logic that says that we're potentially heading towards 30 on a technical level. Again, hopefully fundamentals kick in at some point. Hopefully there's buying action that comes in, and hopefully these positions start to recover and rebound. I think if we got a break back above this level, then, you know, there's a case to be made for a potential bottom. But, you know, I will only cross that bridge and consider it once it's fact. And we also have ZTS. If you're out there in ZTS, I would suggest it's a good idea to get a game plan in place. I think this chart makes a lot of sense. and hopefully with the examples that I've provided to you of what distress looks like and ultimately what happens when these key levels are broken, hopefully you heed that warning, and we'll see what happens. There is a potential that this may start to range a little bit, but again, I wouldn't be one that would want to take any chances. The one thing that I fully accept, and I'm not sure you'll hear many technical analysts tell you this, but nobody knows what's going to happen next week. Nobody knows what's going to happen next month. All we can do is make decisions on what price is telling us at any given moment in time. If you're a long-term investor and you're holding and it works for you, great, absolutely brilliant. I tip my hat to you. But for me, it just makes a lot of sense to incorporate technicals into your work, because it does just help you to maximize profits. Trend following in of itself isn't a difficult concept. What you're simply doing is you're buying the strength in the market, you ride that trend, you make as much profit as possible. Eventually you'll be exited out that position, but you'll be exited out at a healthy profit, and then you simply reallocate risk, and it's just a case of rinse and repeat. And that is what trend following does. And it's kind of a mishmash of investing and trading. It's one of those halfway houses. It's not short-term trading, it's not day trading, which I absolutely hate, but it's something that you can use to facilitate better decision making in the market. So hopefully you've got a bit of insight from that. Now, I did highlight at the start that I had a bit of an announcement to make. Now, over the last 2 years, I have been inundated with requests almost on a daily basis asking me when I am going to be setting up a subscription service and when I'm going to be releasing my premium client content to the world. And I think I'm slowly coming around to the idea that there's many of you out there that don't necessarily have 8 to 10 hours a day to monitor the markets and to build thousands of charts. And a lot of you follow, especially my work, just perhaps as a time-saving mechanism. Obviously, I understand that my work is massively appreciated, and absolutely the CMT Association, etc. The feedback I've had from many of the guys that I absolutely look up to, a lot of them have been saying to me that it's time for me to set up a subscription, and that's really what I'm looking at doing at the moment. Now, I don't know what the numbers are going to look like for this. So if you've come through on my website, there's a link below this video where you can register your interest. Now, what I'm really looking at here is to maybe get something in place for the 1st of November. Now, it's going to be an annual membership. The reason for that is I just don't have the time to be chasing up missed payments on monthly direct debits, standing orders, whatever you might call them in the US, I don't know. But what I will be doing, I think I'm going to be setting up an annual membership, and that's going to give you complete access to our trading ideas, which you can go onto our website and you can have a look to see the types of stocks. I log every single one of them for complete and open transparency. So if the stocks that I choose and the stocks that I'm highlighting as trade ideas, fit the bill for you, then you might find some value in this. I'm not trading low float penny stocks. I'm not trading stocks that are under $10 generally. I'm really giving educated insight into mid cap, large cap, mega caps, etc. So it's really down to yourself. You'll also get access to my weekend premium charting analysis, the analysis that I provide my clients. You'll get bespoke charting. So if you need a second opinion on a chart, there's going to be a facility for you to message me and ask me what my thoughts are on any given chart. And I'm also going to be offering friend referral bonuses. So when it comes round to renewal next year, there's going to be an opportunity for you to get your next year's subscription for nothing. So that's something else that I'm toying with the idea of. And I'm also going to provide you with a dedicated trading community for those of you that want to have the participation with me personally, etc. That is going to be available for you. So for those of you that are maybe tired of hunting around stock twits and maybe the feed on stock twits, etc., that's kind of what it's going to look like. And if this is your first time coming across me, then I better introduce myself. I'm Sam, and as I said before, I'm registered with the CMT Association, and hopefully you can see technical analysis is my thing. I also run honeystocks.com, so jump onto the website. Honeystocks.com is super popular website, heaps of free content on there as well. You don't have to sign up for anything. You can go on and hunt around my blog section. You'll pick up heaps just from that alone. But I think if you're trying to get away from day trading, maybe if you're trying to get trading fitted around a career or a business, if you want consistency, maybe you just want to reduce stress, maybe you want to just learn this for yourself and not just follow others, I think we can probably help you in some way. And like I said, we do log every single chart on our website, so feel free to go and check that out, because it's never fun learning from losses. It's never fun hunting around YouTube for all the, I suppose, the conflicting content. I think anybody can go on and YouTube how to perform heart surgery, but you'll never be a heart surgeon. And that's something that holds true with the financial markets as well. Eventually what will happen is, and I've seen this hundreds of times, where you'll just get swallowed into the Wall Street black hole, and you'll tell yourself you can't do it. So if you do want to maybe align yourself with a new way of thinking, again, feel free to register your interest below this video. And if you've come through on YouTube, I will also stick a link in the description for you so you can register there as well. But if you've stuck around to the end, I do hope that your positions work out well for you, and I have my fingers crossed for you. So thank you very much for watching, and maybe I'll speak to you soon. Thank you.